Nasdaq production.
Hey, yo, got God shining some light on me through the window. Let's go. So we're gonna do a little breakdown here. I'm gonna go over the S&P, the Nasdaq, and the Dow Jones futures. So what we got here, right? We happen to be right. I like this zone. This zone was major resistance, and these two moving averages, right? This is what I've been talking about the past few weeks, the 8 and the 20. So the 8 right now is still being used as resistance the past month and a bit, right? Since the end of May, we come back down to retest and we're getting that rejection now. So we have this zone from 3250 to around 3500. That brings us back to levels we were at very beginning of 2020 and mid 2020, mid to late 2020. So we want to pay attention to see if we slowly dwindle back down to that range, right? Another thing I've noticed, I've had a few people mention it, right, in one of the Discord groups that I'm in, where it's like you notice a stock or the indices or any type of market right now, it'll get this like pump for maybe like 3 to 5 days, and it gets pretty euphoric in that sense. Like you could see some of these little pops that happen end up giving returns like 25%, 30%. But as soon as you think like, oh, things are getting really excited, we get that knockdown, and then, you know, it really kind of goes to show you, right? In a bull market, you buy the dip, and in a bear market, you sell the rip. So there's been lots of rips here where we get that pump, whether it's within 1 week or 2 or 3 weeks, you get it, and then we get rejected immediately. So a big key that I'm looking for is once we cross over this 8 EMA, right? What is it going to look like? So we can go back to 2008 and 2009 just to get an idea of like, what is kind of going on here, right? So we have this big zone. This took again, right, from July all the way to the next year, April, where we couldn't quite get that break up over it. And once we did, it held, right? So it was huge, solid volume coming in consistently. This is on the S&P 500, right? So this is from July up until April the following year. So this is like 2007 to, oh, this is 2 years. Jeez. So we topped out in September 2007, and then we break down all of 2008 coming down. We didn't get a recovery till 2009. So all of 2008 was like a bear market, right? I'm not saying it's looking exactly like that now, but let's just put up that box just to see what's going to happen in terms of time frame, right? So from July, my math is going to do like real bad here. We got 18, around 22 months, right? So from the top, 22 months. Let's figure this out. So we'll go on the monthly time frame just to make it real easy, right? So let's say we topped in November and we come back down. 22 months would be pretty much 2 years from 2021. Let's go November, October 2023, right? On the monthly time frame, we're just getting that cross where the 8 goes below the 20, and look how long that happened for here, right? Quite some time. So it might just be a very long time where stocks might not be attractive right now. We might see interest rates continue to rise. We might see companies unable to, get that profit up, get that revenue increase because one, it's harder to get their products out, right? The past 2 years, it's not like all these companies have been making more products. It's a demand of everything because of the low amount of inflation, right? And now that inflation is rising, it's kind of having this cause and effect where not as many people are buying. Whereas, look, 2 years ago, right, 2020, so much money was pumped out into the markets. Everybody it was a buying frenzy, man. There's people at home getting paid to do nothing, and they were just buying stuff off Amazon, buying this, buying that. Like things like that is what causes the markets to rise and companies to gain revenue. But what we see here is inflation is rising, gas prices are rising, people aren't spending as much money, interest rates are rising, right? It's like it's tough right now in the markets and overall. So that's why you hear these rumors and all the fear about a recession. So this is what could be causing, all these markets to turn, and it could take this amount of time. Then again, I'm just simply relating 22 months back to what it was like in 2008. But from what it's looking like, right, it's in a way similar until it's not, right? So we got that zone that I mentioned from 3250 to 35. We'll see what happens when the S&P 500 futures come back down into that level. Now, when we look at the Nasdaq, I have it a little bit more pretty because I got everything marked out. But essentially, it's the very same thing. Now, when we go back to 2008, again, right, we topped out October 2007, didn't recover until around May 2009. So again, quite a long period of time here. We'll just mark it out and then copy the box. Right, let's clone that. Bring that over here and see what exactly happens. Right, something like that. April 2023. Who knows, right? It could be some sort of a. Then again, we are coming down to the end of it. It looks like. How far did we come back down in 2008? We made a massive 53% decrease. We're here on the Nasdaq right now. We're around 33%, so there could be a little bit more to go in terms of getting lower. But if so, we'd be looking at, right, it leads us right back to around here, which was where we were at the beginning of 2020. Man, that's crazy. We come back to that level. That's pretty insane. I'll mark that out. Right? So that's another level we could dwindle down to, right? So it's all about patience right now, in my opinion. Keep an eye on the major stocks. You want to either dollar cost average or wait till they bottom so you can get that massive potential risk to reward opportunity, right? And again, we look at the Dow Jones, and if we just mark out some spots that we were looking at on the chart earlier this year, right? Look where we were holding as support, and it's now resistance. Right? It's very interesting. We've come back to these levels back in 2020. Like, for the most part, we're back to 2020 levels. So if we're going to go any lower, where are we going to go? We got to mark those out on the chart. We could come back down to here. Major zone back down here, so we can mark that out. That seems like a pretty smart, decent spot to look for support. And that would be around on the, this is the Dow Jones Industrial Average Futures, right? That would be 30% down, almost 27%. But until we get that, what did it look like back in, we didn't even have these in 2008. So it'll be the first time we get some massive bear market on the Dow Jones for at least the past decade and a bit, right? So it's an interesting way to look at markets when you could mark things out, right? You look at the history of it and you look to see where could we potentially come to. No one actually knows, and you really never will know when the bottom hits. But I'm thinking once everything is completely, this is how I think of it. Once people are scared absolutely shitless of markets, like, and not just the stock markets, I'm talking about real estate, every market possible. Like, once people, like, interest rates are high enough, there's people losing jobs, people losing their houses. That's when, it sucks to say, but that's when there's going to be the maximum opportunity. So that's what I'll be looking for in the next few months. Stack up the dough, dollar cost into BTC. That's something I'm looking at, right? But simple things like that. And that's a little breakdown on these markets. This is the S&P, the Nasdaq, and the Dow. But again, it'll be super interesting to see what happens over the next year and a bit in the markets. Peace.